Hi, I'm Adam Rabinowitz. I'm an assistant professor and extension economist with Auburn University and the Alabama Cooperative Extension System. I'm a production economist and focused on policy as well. New here at Auburn, just started in July and spent the last 4 years at the University of Georgia at the Tifton campus. Wendiam?
And I'm Wendiam Sawadgo, assistant professor and extension economist as well. And my focus is agricultural marketing. And I spent the last 5 years doing my PhD at Iowa State University. And I just started here in August.
So today we're going to talk about some of the state of the agricultural economy and give a bit of a market outlook with respect to the row crops that are relevant to the state of Alabama. When we talk about agriculture, certainly need to recognize a great deal of uncertainty that has existed in recent years. We go back about 6 years ago or so, and we had record high prices that have certainly fallen considerably since then, and extreme weather events that have affected production. We also have seen trade issues, and now the pandemic, which has played its role in terms of agriculture too. Focusing a little bit more on the pandemic, when we talk about the impact of COVID-19 on agriculture, we have certainly seen a varying degree depending on the agricultural sector that we're talking about, but there have been some significant changes in terms of consumer demand and shopping patterns. A lot of shift away from the restaurants and food away from home to food at home consumption. There has also been, certainly with the reduction in sporting events and other live events and the lack of crowds, a reduction in terms of apparel. On the production expense side, the personal protective equipment has certainly been an increased cost of doing business for many farmers. We can talk about some of the government payments with respect to row crops that has really tried to alleviate some of the issues with respect to COVID-19. First, there was the CFAP 1 program, which over 13,000 applications came from the state of Alabama, totaling payments of over $90 million. That was limited in terms of the agricultural commodities that it did focus on. And then there has been a second round of CFAP payments, the Coronavirus Food Assistance Program. This did expand the commodities that are included, and so where peanuts, for instance, were not included in the first round, they are included in the second round under varying degrees of payment rates. For peanuts, it is a flat rate of $15 per acre, whereas for other commodities, corn, wheat, and seed cotton, those are based on a specific payment rate based on acres and some production history. Trade is the other area where we have certainly seen a large increase in agricultural payments to agriculture, government payments, I should say, to agriculture in recent years. The market facilitation programs 2 years ago and then last year have increased those payments to producers. Of course, now we see trade issues starting to return back to where they were roughly in 2017 before these trade wars happened. That started earlier in 2020 with the Phase 1 agreement with China. As we have seen throughout 2020, China has increased purchases of corn, soybeans, and even new crops such as poultry and beef. About 71% of that target for China has been reached at this point, and there is great expectation that they will continue these large purchases in the near future to complete that agreement.
Now I'm going to talk a little bit about some of the crops key to Alabama and what their markets look like for the coming year. And so, really the important factor here is we're looking at what's going on with supply and demand for each crop and how we expect those changes to affect prices overall. So starting with corn, on the demand side, as Adam mentioned, with China there's the trade agreement, and China's been importing large amounts of U.S. corn just in the past year. So we've actually reached records for corn so far in the growing season, in the marketing year, as far as exports go. And so demand is way up compared to where it has been the past couple years. Now on the supply side, we've seen a relatively high production crop this year in the United States, and Another factor contributing to supply is that we've actually had a downward revision of our stocks on hand. So the USDA a few months ago actually lowered the amount of corn stocks we have by about 10%. So all those factors overall really led to an inward shift in supply, or a decrease in supply, relative to what was expected probably 2 or 3 months ago. And so really what happened there was overall those contributed to higher prices, at least compared to what we projected over the summer. So the USDA projected prices around $3.10 a bushel during the summer, and that number's gone up to around $3.60 right now. And we've seen spot prices in recent months as high as $4.20 a bushel. So for soybeans, really what we've seen is really similar to what I just mentioned for corn. So again, exports way up to China. Exports at this point in the marketing year are up higher than what we've seen in the past decade. So really strong on the demand side. On the supply side, production was down in the United States for soybeans this year, largely due to lower acreage planted. And there have been other countries providing high soybean crops this year, Brazil and Argentina really being the main competition there. But and they've been also selling a lot to China. But overall, we've had really high prices in recent months. So one thing I'll mention is that just a few months ago, we were forecasted to have the marketing year average price for soybeans be about $8.20 per bushel. That shot up all the way to $9.80 currently. And we've seen spot prices in recent months hitting close to $11 a bushel. So overall, soybeans are trending upward recently. One other metric I'll mention is the stock to use ratio. For soybeans, the past few years had really high stocks relative to the amount of soybeans being used. Those have declined quite a bit, and we've seen prices go up because of that. Now I'll move on to wheat. And so with wheat, demand has been up in the US. Domestic use of wheat products have been up in recent months. Globally, demand's been pretty steady. On the supply side, we've had really just slight production declines in the US, again due to lower acreage. Globally though, Russia had record yields this year, them being a major wheat contributor. So supply is pretty steady on the global stage. Overall, again mentioning the stocks to use ratio, it's pretty steady. Going back the past few years, it's been a relative constant area, and as such prices have been relatively steady. The forecast wheat price for this year is an average of $4.70 per bushel, which hasn't really changed much over the course of the year.
So now I want to focus on a cotton outlook. For 2020, planted acres of cotton had decreased compared to recent years, and that was primarily due to lower prices and also ending stocks throughout the world and in the US that were relatively high. Expected yield though in the US for 2020 is expected to be around 900 pounds and a little bit higher in Alabama. That is going to take ending stocks also a little bit higher than where they were in recent years, and throughout the world we're also looking at continuing increasing ending stocks. The hurricane impact though certainly may play a role in this. We have had 11 named storms throughout the Gulf that have hit either a tropical storm or a hurricane in cotton producing areas. That combined with some drought in West Texas has certainly played an impact on cotton production in 2020. Looking at prices for cotton, we have seen prices start the year of 2020 at 70 cents per pound, and then as soon as the pandemic started to become a major issue in the US, it dropped considerably down to around 50 cents by early April. That has rebounded since, and we have seen it come back to close to 70 cents, although it looks like there's probably going to be very little upward recovery beyond that as we look forward into 2021. On the peanut side, here we have seen planted acres actually increase in 2020 compared to 2019. That is both throughout the US and in Alabama. We're expecting also over 2 tons of peanuts per acre in the U.S., just under 2 tons in Alabama. With near record production, though, we're also seeing a good, healthy stock of peanuts come into play. Now, this is important, actually good news, because at the end of 2019, and during the early parts of 2020, there were considerable issues with respect to warehouse quality and aflatoxin for edible peanuts. And so that raised some issues and some concerns in terms of the quality of the stock and the stock that would be available to satisfy that food need. There is certainly good stock there, and demand is also looking to be up this year. We think about opportunities for a low-priced, good source of protein, and also the storage abilities with respect to peanut butter during this time of crisis that we have seen throughout the world. Price, though, for the farmers is not expected to increase much higher than where it's been, around that $400 to $425 mark, a little bit higher depending on the specific variety that you're actually going to be planted. This is something that we're going to continue to see around this price level moving forward, unless there is really big considerable shifts with respect to either production or demand.
So overall, we've seen there are certain crops that are trending upwards. Corn slightly, soybeans really trending upwards, and cotton, peanuts, wheat, pretty steady looking in the future, but things to look out for. Keep in mind how exports to China continue in the future will play a large role into what happens over the course of this next marketing year, as well as just the general macroeconomy in the United States. I hope you all enjoyed this video.
Thanks for watching.